Hey, folks, welcome to InTheMoneyStocks.com's daily analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. All right, everybody, into the action we go today on this Friday, January 14th, 2022. Again, another week coming to a close. Markets chopping around. Interestingly enough, earlier in the day, we had a pretty nasty sell-off going. S&P was down decently. The NASDAQ initially early was down and then came back and has actually been neutral to positive most of the day, except for really early in the day. So the tech sector is getting a little bit of a reprieve here, which again is kind of intriguing considering how weak the tech sector has been, especially considering this next point. Yields are up decently on the day. All right, so even with this big pop in yields, and the yield, by the way, on the 10-year, 1.77%. Now, it's not above the 1.8% that we hit kind of earlier this week, but nonetheless, that's still a pretty big move, 0.061 to the upside today. Again, in terms of yields on the Treasury or on the bond, that is actually pretty impressive, a decent-sized move. So again, even in spite of that, technology is actually holding up. If we flip over to the QQQ here, you can see the Qs are just fractionally positive. You can see early on the gap down this morning, technology was weak, surged up, big pullback, surged up, big pullback, and you could really actually draw a trend line. Look at this trend line here on the intraday QQQ. This is your line to beat. You get above this line, you get a short-term breakout on the Qs, maybe into the end of the day. I am doing this video a little early. It's about 3 p.m. Eastern time, getting it out to you guys. Again, that's just being done so I can do a couple things with the family this afternoon. All right, so again, into the end of the day, watch that on the Qs. Can we get above that? On the downside, you're starting to create a little bit of a wedge pattern, if you will. To the downside, this would be your key support here. If you take this out, easily going back to these lows in the next day or two next week. If you can get above here, you actually have a shot to retest some short-term pivot points, maybe even the highs up here in the tech sector. Okay, going back to the SPY, let's flip back to that one here quick, folks. A couple things I want you guys watching for on this. Here you have kind of a downsloping channel. And what I mean by that is if you connect these lines and then you connect these lines, you almost have parallel lines, right? I mean, pretty darn close to being perfectly parallel. Same thing applies here. If you get above this trend line, it's a short-term breakout with the upside being the high of the day. Okay, and again, downside, if you took out this, I mean, well, really, you would just kind of follow this down here. Eventually, you get this upsloping trend line here. You might say, well, where the heck's that one coming from? If I zoom out, connecting the low from the 20th of December to this low on, I think this was the 7th or 8th of January, then that's where you get this trend line here. Okay, so again, just a couple little levels to watch. Right now, again, spiders are upticking ever so slightly, but certainly it's not a robust move. Looks like the S&P right now is still on pace for a down day, while the NASDAQ is just right now eking out a little bit of a positive move. All right, we're seeing Google up today, Microsoft's bouncing $3 today, Facebook's up a little bit, Tesla's up a little bit, and then on the other side of the coin, Amazon's down fractionally and Apple's down about 10 cents, which is basically on the flat line. Now, the S&P can arguably say it is weaker today because of the bank stocks. Take a look at JP Morgan, guys. JPM getting absolutely annihilated. You don't see JP Morgan drop 6.5% very often, folks. That is an absolute nasty move to the downside. If I go to the daily chart here, take a look at this, folks. Look at how JPM is negating basically 2, 4, 6, 8, basically 10 days. 10 days of choppy upside action. It's getting wiped right out here. Now, is there a buyable level down here? Not yet. I think you could potentially be a buyer if you connect these lines right here and you came straight into that, let's say Monday or Tuesday. That might be an opportunity for a quick little trade there on a swing trade basis. Aside from that, I think you have to start looking at these levels down here as your next big support level. All right, now could you make a case that there's a head and shoulders pattern developing here? The answer is yes, you could. Let me get my other drawing tool out. Bear with me as I just grab that out. What you could potentially see here is here would be a shoulder, here would be a head, and then here would be your other shoulder. Now, you have to break the neckline. This is your neckline, right? So that would have to be broken. But right now, it does look kind of like a valid head and shoulder pattern. Again, remember, head and shoulder patterns, they only are a factor if the neckline is broken. So right now, yeah, it's a nice little pattern, but without the neckline breaking, it really doesn't mean a hill of beans, right? So just leave it be, keep it on your radar, and we'll continue to follow it here on the charts, all right? But what could that mean? I mean, it's always fun to speculate, even though speculation doesn't necessarily mean much without it actually occurring, but it could mean that yields are not going to necessarily go up much more. You know, maybe this chart is, if it broke the neckline and told you JPM was going to go lower, maybe it's telling you that interest rates are actually going to come back in, because I think, to me, that's kind of one of the only ways the banks are going to do poorly is if interest rates stop going up and they actually start to reverse. Then it makes sense that you could see the bank stocks underperform and actually head lower. All right, so we'll just keep an eye on it. Again, that's all we can do. Just keep an eye on it for the time being. Citigroup today, take a look at Citi, only down 1%. That actually gapped down but had a nice recovery. Bank of America, same thing, down about 2%. I think Wells Fargo reported earnings this morning, and that stock actually outperformed on earnings, and that bank, again, having a nice little move to the upside there on the charts. Okay, so again, the reason I brought up the banks, number one, pretty wild move on JP Morgan, but number two is that shows you why you're seeing underperformance in the S&P 500. All right, the bank stock's definitely on the weaker side. It's also, if you flip over to the Russell here, you can see it's also why the Russell is down almost 0.5% on the day as well. All right, a couple other things to go over. Let's take a look at the daily chart. The daily chart on the spiders, look at this nice little bounce. We were down about $2 just before. Now we're starting to charge up, so only down about $1.30. Now, granted, you still have a little less than an hour to go, so still lots and lots of time left in the day. But right now, you are seeing the S&P cut down on its losses for the day, down $1.20, $1.30 here. But again, bottom line is you have this upsloping trend line, which continues to be a big trend line. The other thing I'd like to point out again is you can kind of have a head and shoulders pattern again developing on this chart. Right? I mean, look at this. I mean, about as clear as day. Okay? So now again, same thing. This would be the neckline. You'd connect the kind of the armpit of it. This would be your neckline. So you'd have to break this for it to trigger. If it triggers, then you can actually calculate the target. And again, I'm just going to do a rough calculation, but it looks to me like somewhere down here would be the rough calculation. Right around 430 would be the calculated target if the spiders did break that trend line. So just worth keeping an eye on. I mean, certainly interesting to keep an eye on here. I mean, fascinating to see these patterns form, and then sometimes when they do play out, again, it's just picture perfect to watch. All right? So again, something that I am keeping an eye on into next week for that neckline. And also remember, folks, the neckline is essentially this channel trend line, right? So again, as we know, if this line breaks, all hell breaks loose in the market. Maybe not like day one, but my point is, if you break this upsloping trend line, which has been the trend of the market, I mean, this channel has marked the trend on the market since basically the beginning of COVID. I mean, you know, aside from this outlier dip right here, but starting in basically May, this has been the trend. Same thing on the Qs, right? So the Qs, same thing, going all the way back to this May, April period, this has been your trend. These two lines have marked the ups and the highs and the lows on this market for a long, long time. So what does it mean? Well, it means that whenever you do break this area here, especially confirmation-wise, that to me would be very, very bearish for the market. I think that's your next big sell-off when that occurs, folks, when you confirm outside of this channel. All right, and look at the Qs today. Qs today opened lower, but now they're above. Now, by the way, the Qs are up about $1.05 with that little bounce in the S&P that we just saw as well. But right now, the Qs are above. If by chance they sold back by end of day or on Monday and got below that line, then you'd have to go into kind of a yellow alert setting for the overall markets. And then if we confirm below that, then it's all out red alert. Like, you know, hardcore potential big next move leg down in the markets. All right. So again, we'll have to see. What's interesting too is that number one, you're going to get tech earnings next week. You know, we had the banks this week. Next week is going to be tech earnings. So I think you get Netflix and a few of the other big players out there. IBM probably reports. But also at the end of the month, the Federal Reserve has a meeting. So I don't believe it's next week. It's the following week. But that also is going to be potentially a major event for this market. Okay, so really wild stuff here, guys. Again, spiders, you can see how quickly the markets are moving here. Now up 65 to 70 cents on the Qs after they were just up over $1. And it's just the gyrations of a market that is very, very volatile right now. All right, taking a look at the Russell, not a whole lot new to report on the Russell. Again, nothing to do here. You're just seeing a lot of chop on the Russell as, again, it continues to hover. I mean, really amazing if you look at, you had this one outlier potential failed breakout here. But aside from that, I mean, look at this. I mean, the Russell has stayed in this range since the start of 2021. It has now been over a year that the IWM has been in a range of, basically the low end was 207 here, and the high end was around 234. And again, you did have this one little breakout, and then it failed. But aside from that, it's just remarkable to see a market go sideways for so long. Very unusual, in fact. No, what makes it more unusual is that it failed. Usually consolidation like this, there's a breakout and it's just like off to the races, like exponentially, a monster move. But again, in this case, it failed. And that's very, very bearish for the overall Russell, at least in the near term. If it could get back above there, which probabilities don't probably tell us that that's the likely scenario at this point, then that would be a positive for it. But certainly bearish. All right, next up, let's take a look at some trades from today. Let's go through those. So I picked up Square today, guys. I had to pick up Square. Lots of support down here. Huge level. We obviously played this earlier in the week, on the dip, and we made some great money on it. I picked it up at 131.45, so we're in the money about $1.40 at this point. Obviously, I'm going to look for about a 10% move again, so I'm here to hold on. It's also a starter position because eventually this is going to break lower and it's going to go to here. So I have to be able to maneuver it. So I would probably every $10 down, I would add to the position, accumulating 5-6% of my portfolio in it from the starting position of 1% at this point. But again, I wanted skin in the game because there's a lot of support here. And this stock has been absolutely brutalized to the downside, so it is technically oversold, just like some of these others. AFRM had to do this today, guys. Take a look at AFRM. Let me get rid of this top one because this is all you care about. There's a gap fill right there, and look at all this support, all these pivot highs right in here. I mean, this is epic support on AFRM. Now, again, I say epic, but obviously I still was smart enough not to overload the boat on it. I just went in with my first toe dipping in the water, and that's done on purpose, right? I mean, if you see the NASDAQ break down here, if you see the selling continues, this could go down another $5 per day for the next week or so. It could easily be a $50 stock. Now, I still think it's due for a bounce, but you have to, in this market especially, we have to err on the side of caution because this isn't, the buy the dip market is not a sure thing anymore. You are seeing buy the dips. We saw it earlier this week with a big bounce in names like this, a name like Square, a name like SE, and so forth. But it certainly is getting less, like the buy the dippers are getting hit more and more. They're getting brutalized more and more, and we have to be aware of that. They're not going to be so readily ready to step up. All right, but either way, that is a really good level on a firm. I had to give it a little bit of a shot. Lastly, today I did add to my NET, guys. NET actually doing pretty well. So after an early morning dip where I picked it up at $95.75, I added to that position. It brought my average to 101.95. And again, the beauty of it is we're basically a couple dollars out of the money at this point. And if we do get a bounce, then we should be in really, really good shape. And it wouldn't shock me to see this thing go back to 115, 120 again if these beaten down plays can get a bid. Now, at some point, is it going to go lower? Yeah. But I do want to show you this. So this was your level. This is why I waited. A lot of you guys, I think I even got some questions in the live day trading room from people who are members in Verified Investing. And they were like, oh, and this was yesterday at like 103 or 101 or whatever it was. Oh, why aren't you adding? And well, because the chart's not telling me yet. Today at the lows, look at this right there. The chart told me that was the time to add. And again, the other factor too is you don't want to average in on a position when it's not going to affect your average dramatically or really well, especially on something as volatile as NET, which was down over 10% yesterday. And it's nice to see it up about $1 today. But overall, it's got to really impact your average. And by doing it today, it really did impact my average very, very nicely. Okay. All right, so that's that, folks. Again, we are seeing SC down a little bit again today. I was very close to adding. If this had broken, believe it or not, I had an order out on this to buy below 170 today, and it got to 170.03. I was going to just pick up another 1% of my portfolio there. I added Peloton yesterday again. Peloton down again today. I'm not ready to add to that one just yet. It's only down about 85 cents, so let's just be patient on that one as it has come back off of its lows very nicely. And then obviously Teladoc, TDOC, which we made lots of money earlier this week on, having actually a little bit of a green day north of 79 here. Again, just a name. So these stocks have been absolutely annihilated. They were kind of like the hottest stocks in, early 2020, kind of mid 2020, right? We could see the run up here, 2020, look at the move up, and then look at where these things have come down to. And what I love seeing is, levels like this. Now, this still tells you it could go a little bit lower, but like you're getting so close to the pre-pandemic levels on Teladoc. Now, remember, Teladoc is like, virtual doctor visits and all that kind of stuff. And the beauty of it is that you're now coming, so you could arguably say that virtual visits, because of the pandemic, became a normal thing, right? And so even after the pandemic, people are still going to be like, well, why would I go to my doctor? I might as well do a virtual visit, instead of the in-person if it's not an emergency or something like that. And I love seeing charts like this come back to those pre-pandemic levels, because you're essentially getting in at those levels prior to what we know changed the landscape. It's kind of like Zoom, right? So now, even though the pandemic and people maybe meeting in person, but Zoom continues to go lower, and it's not quite to those pre-pandemic levels, obviously, which were all the way down here. But I mean, like, you get back to this area on Zoom, and I haven't picked it up yet, but I am eyeing it. Like, this would be an amazing entry on it. Amazing entry. And again, there's actually some levels where I might even add, like right here, there's a gap fill. There's a couple other levels, but you guys get my drift on this. Is the idea, the idea behind investing and getting in on a kind of a groundbreaking change in the way society does things at pre-levels from when that change occurred. All right. So anyways, just a little side note there. Let's go into cryptocurrency here real quick here. And by the way, the 10-year yield is now 1.781, so we are continuing to move up on the 10-year. I will continue to keep you guys posted on the 10-year, as obviously that is a very big deal. All right, let's take a look at cryptocurrency here. Let's go to Bitcoin. This is a different coin here. Bitcoin's actually having a little bit of a bounce day. There's nothing much new to report on this, right? So basically, you're up a little bit today. This seems to be floating with technology. One of the things to keep in mind is the Qs are the high-risk assets, right? Those are the stocks like, the NETs and the Teladocs and the Teslas. These are the ones that move the most up or down. So we're seeing today the technology, the Qs rally a little bit. It seems like that's what's taking the Bitcoin chart up just a little bit. Now, I'm still in the camp that I still think we go back to about 46,000 right up here before potentially the next leg lower. But again, we got to just see. We basically have a very defined level now to watch, which is this area at 40,000. So 40,000 is the level. Again, I think I explained this to VerifiedInvestingCrypto.com members yesterday, but the head and shoulder pattern is kind of a tricky thing here, because let me show you guys this one, right? So basically, you broke below. Here's your neckline. You broke below here, and then you closed back above, but you didn't confirm. So there's two ways of thinking about this. Number one is you could just say, hey, you close above, the pattern's failed, or you could say it needs to confirm above, in which case it technically hasn't failed. I actually think it is going to fail. Just the way this pattern is structured, I actually think the head and shoulders will end up failing, but I still think crypto's going lower after it gets back to about 46,000. And again, if my prediction is correct and it does go back to 46,000, then that would be negated. But anyways, it's neither here nor there. Bottom line is, let's just keep an eye on it. Bitcoin getting a little bit of a rally today, and we will keep our eyes on it. Gold today. Let's take a look. Gold is coming in just a little bit. I still love the price action this week in gold. One of the things that, it used to be, everyone used to say, hey, listen, when yields go up, gold sells off, right? And that was the mantra for the last 20 years. I've come out and said for the last year, that's not true. When yields go up because of economic growth, then gold goes down. If yields go up because of inflation, then gold does well. Well, yields are sitting basically at their multi-year highs here, right near 1.8%, and gold is also near its recent highs. So right there, you can see that the thesis that I have looks to be more correct in that respect. Having said that, I still think a breakout is coming, and I think we will get that much sooner than people even think. I think even by the end of January, you could see a break above this wedge pattern high. Next up, let's take a look at silver here. Silver pulling back just a shade as well. Not much to talk about on silver. Really, you're just watching this level right here on the SLV. I will continue to watch it into next week. Right now, again, overall, I think being a metal, you have to be overall longer-term bullish, but shorter-term, again, it's a little bit more of a mixed bag on silver for me. Lastly, oil continuing to go higher here. Really remarkable, guys. And again, this is quite the move here on oil, up almost 2.7%. I am going to add to my SCO. In fact, I will likely pick up a little bit here when I'm done with this video, since I still have some time left in the trading day. It's only about 3:15. But again, you guys should be getting, by the time you watch this, you'll probably get that alert out on that. All right. Aside from that, we'll watch and see. Oh, one thing I did want to go over is let's look at the actual oil chart on the actual chart here. Let me bring that up now. And the reason I want to look at this is WTI. Let's do this. The reason I want to do this, folks, is because, let me see which one I want to go to here. We'll use this one. So this is why I wanted to bring this up, is because you can see even with today's high, let me get rid of those lines there. Even with today's high on oil, you're still not back to double top. So, makes me almost want to wait on oil to see if it gaps up Monday right into that double top. In fact, I think that's what I'll do, is I'll wait to buy more SCO, seeing if it can gap up. But no doubt about it, I want to add to that position. Oil's getting very, very extended here, and it looks very good in terms of a potential double top. All right, guys. You guys have a wonderful rest of your day. As always, it's a pleasure to be with you and guide you through. Have a wonderful, wonderful weekend. Take care.